Welcome back for another report on the oil market. The oil market continues to remain in the epicenter of traders' focus after the commodities price moved to a new yearly high in the past days. Driven by fundamentals on different fronts and due to the persistence displayed currently by traders, this report aims to provide a brief overview of some of the most important matters in the oil market. After the fundamentals, our technical analysis comes up with a look into the recent price action and important levels. Economic data from the oil market in the previous days may have been a major influence to the recent price action. In the past week, the EIA weekly crude oil stockpile figures indicated a large drawdown of minus 6.65 million barrels. The figure was a surprise as a minor surplus was expected. Also in the past week, the Baker Hughes oil rig count figure displayed a rather impressive outcome. At first, the figure showed a rise of active oil rigs from 299 to 306, yet the figure was later revised to 392, which is a significant increase in active oil rigs and could imply a huge increase in demand. In the most recent days, the AP weekly crude oil stockpiles figure was also released with a drawdown of minus 5.8 million barrels. The figure overcame forecasts for a smaller drawdown and WTI gained upon release. Overall, these figures confirm the picture of a growing demand for the oil market while supply is being reduced. On a separate note, the blistering winter storm across the southern US has left millions without power. The storm has caused a number of blackouts in Texas, where the energy grid was overwhelmed by a surge in demand. The cold wave in Texas is expected to last until the end of the current week, while at the moment prices are on the rise, partially on account of the shut-in production. Moreover, data from the Middle East and specifically Saudi Arabia showed crude oil exports were lifted to an 8-month high in December 2020, according to official data released by the government. Exports for the month were 6.5 million barrels per day, against 6.35 million in November. Furthermore, from the Middle East on Monday, oil prices received a short-lived boost after it was confirmed through media that a Saudi-led coalition fighting in Yemen stopped a drone with explosives. According to the report, the drone was fired by the Iran-aligned Houthi group. In the past, we have seen attacks on Saudi Arabia's Aramco oil production facilities that caused oil prices to jump. The incident is currently raising fears of fresh Middle East tensions, and traders should be alerted for further headlines on the subject as they can move prices substantially. As a final note, we could say that the oil market at the moment is also supported by optimism from the global vaccination process set in motion to combat COVID-19. Yet at the same time, according to the pre-mentioned updates, oil's price seems to be benefiting from various angles on different matters. Are we heading into an overvalued price territory for the oil market? It remains to be seen. Moving now to the technical analysis and WTI's 1-hour chart. Since the 15th of February, the previous Monday, WTI has moved above our S160 support level, reaching levels previously seen back in January 2020. The latest price action, however, has sent the commodities price even higher, trading nearby $62, which implies the bulls may not have calmed yet. Our levels for a possible continuation of the current upward trend are the R163 resistance barrier and even higher the R264.5, which were both seen back in January 2020. At the top, we have set the R366.5 hurdle as the highest point for this report. However, a possible drop lower for the commodities price could send it to retest the S160 support level, and a fall even lower could make the S258.5 come into consideration. Our lowest level is the S356.5 barrier, which could be reached by extensive profit taking. The RSI indicator below our chart is now lower than 70 and above 30, possibly a sign that some traders are locking in profits in the short term. We hope that you found this report useful, and if so, please do not forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.